My name is Samantha Bear. I'm Associate Policy Counsel with the Oregon Farm Bureau state staff. I am on the government affairs team. I work primarily on a ton of natural resource issues. My background is in natural resource law, labor and employment, and sometimes I dip a toe into tax. I am an attorney, but I want to disclaim right out the gate, I am not a professional tax lawyer. I'm an agricultural law attorney, so if you guys have really detailed questions, I strongly encourage you to reach out to your personal lawyers and your personal accountants, because I feel a little bit out of my league today presenting with my colleagues who are awesome tax lawyers. So as Jonathan said, despite not being a tax attorney, I've worked on this issue for almost 2 years now. This question was actually my first research assignment with the Farm Bureau when I was just an intern still in law school. And I've spent, like John said, a ton of time doing this legal research, working on drafting legislation around this issue. So despite lacking that experience, I do feel pretty comfortable here today talking about this policy and this statute. So this issue came across Farm Bureau's desk in 2018. Marion County members reached out to us because they started receiving letters from an assessor asking them to inventory their farm machinery and equipment under ORS 307-394, which is the exemption, which we're going to talk about a lot in detail, so don't worry about writing that down. And we also heard rumblings in the county and across other counties that assessors were assessing farm machinery and equipment differently county to county and even farm to farm, even on the same pieces of machinery and equipment. Depending on the farmer's setup, the assessor was going about things differently. And so that is what sparked my job of doing the legal research of finding out officially what farm machinery and equipment is exempt from personal property taxation. Because what we're going to cover today is what appears on the face of the statute has been interpreted a number of different ways by the taxpayers. It's interpreted completely differently by the assessors, and to no one's surprise, also interpreted completely differently by the Department of Revenue. So we have a ton of different interpretations that are often conflicting, and it's caused an immense amount of confusion. And we do have a bit of an issue on our hands right now, which we at Farm Bureau have been trying to address within the legislature, and we'll talk about those efforts moving forward. But that's just the background. So, goals of my presentation today, I want to just provide you guys with the general landscape of what is the statute, what does administrative rules say, what are the varied interpretations that we have learned throughout this 2-year process, and then what kind of issues has that caused with implementation of the statute. I then want to move into current, past, and what we hope to be future legislative efforts. As Jonathan said, we're going to really need your guys' help on this one. It's going to be a big lift, and we're going to need concrete feedback from our membership about what their farm machinery and equipment looks like on their farm and what would be exempted and what would not. So I want to spend some time today to talk about legislative efforts. And then ultimately, I want to encourage you guys to go back today with this understanding and survey your equipment. Look at how you have it set up, look at where it is, what you use it for, and do you think after what you've learned today, should that be listed on your tax return or should that be exempted personal property? And then work with your own personal accountants and attorneys to figure out what you should be listing and ultimately what you should be communicating to your assessor. So a little bit of background. You guys should probably all know this, but if you operate a business in the state of Oregon, you must file an annual return listing the equipment used to run your business. However, there's many different tangible personal property exemptions that we have worked out in the legislature for different industries. And ORS 307-394 exempts certain items of farm machinery and equipment. And as I just said, there is some confusion of what that actually means and what can actually be exempted. And I see on the slide, I talk a little about in 2019, how we came to find out about this confusion. So let's spend some time on the statute. This is ORS 307-394. There's a lot, we're not gonna read it. On the side there, this is my attempt to basically summarize the key points for you. Under this statute, items of tangible personal property, that's a key word we're going to talk about, tangible personal property. There's real property, and then there's tangible personal property. So only items that qualify as tangible personal property, and we're going to talk about this in detail, can be exempted from ad valorem property taxation. And under sub A, that would be items of farm machinery and equipment that are tangible personal property that are used primarily for what we call and what assessors call in the field. And that includes planting, raising, cultivating, irrigating, harvesting. So that would be in the field. That's the term used by assessors, or placing farm crops in storage. Sub B, we have farm machinery equipment used for animal husbandry, apiaries, dairying, sale of dairy products. C, there's a remediation plan. That's all machinery and equipment used if you're doing an OSU extension remediation plan. That's pretty rare. And then we have D, which we call the catch-all provision. So farm machinery and equipment used primarily in any other agricultural or horticultural use or animal husbandry or any combination of those activities. And then sub 2 is basically tools, machine equipment used to repair, maintenance, and construction owned by farmers used for farm purposes. So all your on-farm tools and implements. So that is the statute. That is where this exemption is. I don't know about you guys, but that reads very broad to me. And I think that's what most taxpayers think. They look at this and they say, that's basically most farm machinery and equipment on farm. And the guidance provided to the taxpayer, pretty similar, pretty broad. This one up here, this comes straight from the Department of Revenue's website. It lists farm machinery and equipment and puts the statute next to it. The bottom one comes from Washington County Assessor's website. That's the guidance they give. You can see down the little one, what is exempt? Farm machinery equipment, go back to the statute. We've surveyed almost every single county assessor's website. Besides, I would say Polk County has the best, and even then, I would argue that it doesn't give you a full picture. This is what the taxpayer is being told. This is my favorite one. This is from Lincoln County. It actually, if you look at the bottom, tells you what property do I not even report. Farm animals, and then farm machinery and equipment. Very broad. It's not giving you guys a lot of guidance. If I was out here and this is what I had, I would think a majority of my machinery and equipment is exempted under this statute. Unfortunately, that's not necessarily the case. And that's what we've learned over the last 2 years. We have learned that the general public and the taxpayer believes that, and this is actually our interpretation as an organization, that this was supposed to be a broad exemption. Unfortunately, that has been whittled down and subsequently interpreted differently by the Department of Administration's administrative rules and a series of case law dating back to the early 80s. So that broad exemption under the black letter of the law has actually been substantially narrowed. And we'll talk about how that is done. But this broad exemption that the taxpayer has believed is not necessarily the full picture of what the law is in the eyes of the Department of Revenue. So I try to summarize that long list of administrative rules and case law. I've kind of made this little chart. You know, you can't really see it. We're going to walk through it. But really, it's a two-step analysis. And I put two steps in quotations because it's actually a lot more complicated than that. But there's two things that you need to look at when trying to figure out whether this should be exempted or not. And the first is the item real, or that keyword, or tangible personal property? If it is real, it is not exempted under this statute. If it is tangible personal property, you got to move to step 2. There's two things here. What is it, and what is it used for? So is it tangible personal property, and then what is its use? So after you look at whether this would be classified as real property or tangible personal property, we move to what's its use. Is it for harvest or in the field, like what we talked about earlier? Is it cultivation, planting, irrigating, placing farm crops in storage? Or what we learned from administrative rule and case law, is it for processing? Food processors have their own exemption. Some of you might be thinking about that. That's different. What we're talking about lies in an area just outside of the food processing exemption, and we'll kind of talk about that in more detail as well. But if it's for harvest, if it's for in the field, it is the opinion of the Department of Revenue that is exempted. But if it moves into the area of processing, it is no longer exempted under the statute. So we'll talk about step 1. Real or tangible personal property. So in statute, real property is defined as what I think we would all know to be real property: buildings, structures, improvements, or machinery or equipment or fixtures erected upon, above, or affixed to the land. And affixed to is what we really need to focus in on for this purposes, because I think we all know that a barn is real property. In case law, we've also seen harvesters being real property. Those huge structures that you literally have to build, that's real property. The question for us is, when does our machinery and equipment move from being tangible personal property to real property? In rule, the Department of Revenue has defined affixed to as annexed or attached to the real property by bolts, screws, nails, or being built into the structure. They also say that machinery and equipment can become real property if it just rests in place by virtue of its weight. So if it is just sitting there, they think just even if you moved that farm machinery and equipment into your barn, if it is sitting there by virtue of its weight, that therefore can be real property and therefore not exempted under the statute. They actually in rule give specific examples. They say all pipeline milking equipment, seed cleaners, rock crushing plants, less applicable to us, or plywood machinery or presses. So seed cleaning equipment, they actually call out explicitly in rule. So when I first learned this, I was surprised, because in my mind, when I think of real property, I think of a building, not a seed cleaner that someone might have even been on wheels, moves into a building, uses, and then can move out of a building. So that's the first issue. Then we talk about, so we're still on step 1, is it real or tangible personal property? And this is where they narrow it down even more. So in statute, tangible personal property includes all chattels, movables, such as boats, vessels, merchandise, stock and trade, furniture, personal effects, goods, livestock, vehicles, farming implements, movable machinery, movable tools, and movable equipment. What's important to keep in mind about this statute is this applies to all of tax law. This is a definition that exists outside of this statute, and this is a definition that applies to all of tax law. When we talk about legislative efforts, we'll touch back on that, but keep that in mind. In rule, the department goes even further to define personal property as movable machinery, movable tools, and movable equipment, including items that are readily movable as opposed to stationary and fixed. So in their mind, they're literally talking about tractors. They're talking about tractors and wheelbarrows and things that are up and moving in the field. If it is fixed in place during the ordinary course of your business, in the eyes of the Department of Revenue, it's their interpretation that is therefore real property. And they like to cite back to this case, Saunders versus Department of Revenue. which I won't go into too much detail, but at the time this case was decided, the statute was markedly different. It was actually the inventory statute, and they were talking about movable things such as grain, like bins, and things that someone can literally pick up and move as inventory. And so that's where the court came to their reasoning here, things that are generally movable and movable in the ordinary course of business. And despite being 1985, the Department of Revenue has held on to that and cites back to this case to back up their belief that only things that are literally moving in the day-to-day operation of your business. And I know, annoying lawyer like me, I look at the term movable and I say, well, that has a capability of being moved. They go even farther. They go beyond movable, having the capability of being moved, into actually being moved and moving in your day-to-day operations. So that's step one. If you can get past step one, you then move to step two. And so when I say, I think it was worth mentioning, the two-step analysis, this is what the assessor, from our conversations with the assessor and what we have learned, this is how the assessors do it when they go out on a farm. They say, okay, what is it? Does it pass the first test? Then we look at how is it used? Is it for in the field or is it for processing? So the Department of Revenue defines processing as altering a crop in any way: washing, icing, sorting, grading, waxing, boxing, slicing, or cutting. That is very different than the food processor statute and what ODA defines as food processing. The department goes on to say that machinery and equipment used to place a farm crop in storage is exempt from taxation. However, once processing of the crop begins, it's no longer a crop but a product. And this is the example that they give in administrative rule. Apples are picked and go directly into cold storage. This would be considered placing a farm crop in storage. When these same apples are picked, sorted, washed, or boxed, and then put back into cold storage, that is no longer a crop, that is a product. Which we at Farm Bureau strongly disagree with, I would like to add. We think that there are a lot of things that process right there, that's just harvest. If you can't clean your crops successfully and get them into cold storage, you didn't have a harvest at all. And when someone is boxing or brushing off watermelons or doing a light water rinse, when a farmer does that, that's much different than when Harry and David is boxing up pears to be sold at Christmas time, although that term is both boxing. We who actually are around agriculture and understand that, have that understanding. The Department of Revenue and their auditors and their assessors do not, and so that's an example of how this has gotten really muddled. Another case they like to cite back to, which is an Oregon Supreme Court case. It's a very well-standing case. It's called the King Estate Winery case. That talked about, well, should winery equipment be considered for harvest or should that be for processing? And the Supreme Court unequivocally said, no, winery, not vineyard, winery equipment is turning grapes into wine. That is processing one crop into a different saleable product. And they determined that the legislature did not include processing of farm crops in this list of in the field, only the things that are listed in the statute. And so that case is important because it solidifies the Department of Revenue's reasoning. However, we can all take issue and have different interpretations with what their definition of processing is in rule. So just to recap the two big issues, under administrative rule, under what would be the view and the opinion of the Department of Revenue is that farm machinery and equipment must be moved or movable in the ordinary course of business to be considered exempt tangible personal property. Any farm machinery equipment must not be affixed to real property, as in hard plumbed, welded, built into, bolted down, screwed, or nailed to real property. That's the first piece. And then machinery equipment used for only cultivating, harvesting, that lists the in the field, or placing them directly from the field into storage is exempted. Any machinery equipment used to wash, ice, sort, grade, wax, box, slice, or cut, or otherwise process farm crops is not exempt from personal property taxation. So I'm gonna stop there. Do you guys have any questions? Okay.
This has nothing to do with the age of the equipment, whether it's been used or not used for years.
So when you are listing, age and value does come into play, but not within this reasoning. I cannot remember the exact age, but then I think the value threshold is over $17,000. So that comes after the fact, once you make it through this analysis, and then when you list on your return, those come into play. But generally, whether it's tangible personal property, whether it's used for farming in their opinion, or for processing, none of that is a factor. It's just what is it and what's it used for. Peter?
You made a comment, in fact, I think it's on the second or third page there under background. In general, if you operate a business in the state of Oregon, you must file an annual return listing the equipment used to run your business. I've never done that. I've never been aware that we had to do that.
So that comes directly from assessor county guidance.
That's not to the state, that's from the counties.
Yes.
Okay, so different counties obviously do it differently.
So Jonathan,
I've never been requested to do that. I've never done it. My dad never did it.
so different, you can help me with this piece, that there are some DOR assessors in different counties, and there are some counties that are basically independent of the department, and they have different requirements, and that's another reason why this has been an issue.
Yeah, I mean, I wouldn't say they're like DOR assessor. I mean, every county has their assessor, right? But it's determined on the bandwidth of that county assessment or assessor's office, if they bring in Department of Revenue help or not.
Yeah.
And so you see out like in, I think Hood River is a good example. Hood River actually has a lot of Department of Revenue assistance in their assessment work, whereas like Marion County, Yamhill County, it's all done in-house. And to your point, it's like assessors are really decentralized, right? I mean, they're either elected or they're appointed by your board of commissioners, and so they're out there making these calls. But then if they don't know something, they'll go to the Department of Revenue for guidance. But again, in some of these counties, the Department of Revenue, when they come in, they don't take the guidance of what the county has done historically. They just come in with what their own guidance says. And so you might have somebody from the Department of Revenue coming in where traditionally the county has not assessed these things, and they're like, nope, we got to assess them now.
And so
that's a huge problem.
Yeah, and what we have learned and what we have been told is that you are supposed to be doing this, but with this statute, and Jonathan, you can also help me out here, it's upon the farmer to be listing that yourselves.
Yeah, so what we found out too was that there's a lot of self-reporting per se in terms of what farmers think is real property or tangible personal property, right? And so when a traditional business, I guess, an office business or whatnot, files out these reports, they list chairs, tables, computers, everything, because they know that that's part of those kind of assessments. And then the assessor determines, okay, this is going to be taxed or exempt. With farm equipment and machinery, that practice has really been left up to the farmer themselves, whether to say, yes, this is real property, I have this massive building, obviously it's real, or this piece of machinery that I have plumbed or wired in, but I move it around, or it could be moved around. That's my own personal property. It's not part of this building, therefore I'm not going to list it. And so there is that level of self-reporting, and that's where Marion County came in and said, hey guys, you need to start reporting all this stuff, even if you think it's exempted. That's our job to make that determination, not yours. Again, the problem is that they're gonna start taxing it as real property, when I think we've had the long-standing understanding that that's personal property. So that's where a lot of this conflict comes.
Yeah, and to add, so I've had Jonathan come up here because Jonathan is our lead on tax issues, and he handled the initial intake and the initial background research on all of this before I started diving into the actual case law. And I think, and I'll answer questions, but I'll say the meta point, if I can get anything across to you guys in this presentation, what the black letter of the law is, what the Department of Revenue could say and could enforce is not what has been happening in the past. And there is a very serious confusion and lack of understanding on part of the taxpayer between the assessors. You can see from the guidance I put on what people are supposed to be doing and what people are reporting. My goal of this presentation is to give you all of this different interpretation to know that if the Department of Revenue took that position and chose to and wanted to be highly aggressive, these are ways that they have interpreted it, and these are ways that they could reason against you on your farm. Let's go back over here.
At a more basic level even, if I understand the situation, is it initiated by the county, sending a letter?
We've seen it different ways. We've seen...
If farmers have not ever even received a letter,
Yep.
what is their responsibility?
So this is a great question. The question is, how does this kick off? And we have seen it done differently in different counties depending on assessor availability and resources depending on the county. If you have an assessor's office, from what we have seen, that is fully staffed and has funding, they are actually going out and sending letters and doing audit inspections. Other counties are just waiting for people to give them this information. It is an absolute mixed bag, and it's really frustrating. I think you had it.
Reported where? How?
It's supposed to be, from my understanding, on your tax return.
No. It's separate reporting.
Okay, does that come a separate form?
From the county.
Yeah.
We have a food processing operation on our farm, and we hadn't been doing this because we thought we were always exempt. Marion County sent us the form.
Okay, yeah,
So now we are, every year we're getting this form. We're below that 17,000 or whatever by the time they depreciate our equipment just used for processing. But we have to report every year. But what's so unfortunate, this list shows equipment that is not being used anymore. But until we physically remove it from our property, it stays on.
Yep.
But it's every year, like, and it's due, I believe, March 15th or March 1.
So, yeah, to clarify, I've seen it where some counties are sending it out, some counties have it up on their website, some counties are doing it only when people report. It is an absolute mixed bag on how people actually know this, and the Department of Revenue has no guidance on this.
So if they don't ask, we don't have to tell them?
You are supposed to report this. You are supposed to follow the law, and you are supposed to report this. We will get into implementation, and I feel like this presentation is going to be probably more frustrating for you guys than actually helpful, which is what I want to say. I'm not a tax lawyer. I've only worked on this in the policy department. What we are trying to figure out is what we have learned, and why we'll talk about this, why our bill didn't pass, is even the Department of Revenue and the assessors, there are more questions than there are answers on this. You are supposed to be doing this. You are supposed to be reporting. I don't know which county, how many assessors you have, how many times they're actually going out and going onto your farm. I've heard that it's years and years for them to actually show up. You are supposed to be doing this though, technically.
So you're telling me that all my feeding equipment for livestock, whether it's a hay chopper or just spreading the hay out, is not exempt?
So it would depend, and that's another annoying answer. It's absolutely going to depend how you have it set up. What's it doing in your day-to-day operation?
It's pulled behind a tractor.
So that would be moving for, so that would basically
But it
get
chops.
you. But it chops. And there is actual case right now about hay compression and whether that's cutting a hay bale in half, whether that's turning it into a new product. That is currently being litigated right now in Lane County.
Okay, so even if it chops it up and puts it on the ground behind the tractor, there's questions as to whether.
That's a gray area, and that's what I'm gonna say. This is all gray area, unfortunately. So yes, that is, if you had a really aggressive assessor come out and wanna argue that you've actually processed hay at that point, potentially.
Will the litigation in Lane County, will that bring clarification to like seed cleaners and so on?
No. So where they're at on that case, that's only gonna talk about hay compression systems. And actually, which is also very frustrating, that it probably could only be used for that actual model of a compressor, which from my understanding was this really huge piece of equipment. If you have a smaller system, that might be different as well. So this is all really fact specific. That's why I'm encouraging everyone to go back and start looking at your piece of machinery and equipment and start working with your own accountants and your tax attorneys to understand, have I listed this before? Should I have listed it? Could they get me on part 1? Could they get me on part 2? And start working with your own consultants and professionals on how to present that information. So we can move on. Somehow I'm going backwards. Okay. So, implementation. And you guys have basically already hit the nail on the head. This has been implemented differently, county by county. It has been implemented differently, farm by farm, even an assessor by assessor. Because an assessor has to go out after you list what you think you should have listed or what you think you shouldn't have listed, then the assessor shows up to basically fact check you. They go on your farm and they do this 2-step analysis. It is subjective within the assessor at that point to determine what they think is correct and what they think is not correct. The assessors, we've worked really closely with them in this process, also don't have good guidance here. They also don't understand this case nuance and administrative rule. So some of them also view it as a broad exemption, others don't. So we've seen a ton of different discrepancies throughout this process. Again, this is this background. In 2018, Marion County Farms started realizing these discrepancies. Some started to receive letters from their assessors stating that some machinery and equipment should be taxed, while other farms in even the same county didn't get those letters. We also learned that this one assessor was frustrated himself by the lack of guidance and the lack of understanding, and so he started sending out letters trying to inventory, and that scared some folks because then they were he basically kicked the hornet's nest as to what this is. We've had continued litigation, as I just mentioned. There's one in Lane County going on. You can appeal your own personal tax assessment. So that is why there's been a lot of appeals on this issue, and generally frustration, which I think we're all feeling in this room right now of like, what is going on and why is this girl presenting on us with a bunch of things that aren't actually helpful and just confusing. We're all feeling the same things. So that led us at Farm Bureau to do some legislative efforts. We realized in looking at the black letter of the law that there were some things that were just fundamentally unfair in our opinion, and that if we could change the statute, we could maybe provide a little bit of relief here. And the first one is the bolting down issue. There are some pieces of machinery that you have to bolt down because it walks. The hay case in Lane County, that was literally wheeled into a barn. It came on wheels, and they brought it into the barn, and it was not safe to use, so they popped the wheels off and they bolted it down. The Department of Revenue said that's real property. The second you took those wheels off, it's real property. Your neighbor has the same piece, he left the wheels on, tangible personal property. We think that is fundamentally unfair. One of the goals of our bill was to draft it in a way that would remove that bolted down issue, to just try to provide a little bit of relief there. The second piece we tried to deal with is the stationary affixed piece. If you don't move it every single day, in our opinion, that doesn't change it to be real property. That's not the same, because you could go move it. Could you move it in 12 hours? Could you move it in 4 hours? Could you get a crew together and put it on, a forklift and move it out of the building? That's tangible personal property. We wanted to try to provide that. The second piece, or the last piece, is the processing piece, the preparing farm crops for storage. In our opinion, it's like a gap. It's a very binary view of farming. You're in the field, and the second you leave the field, all of a sudden you're done harvesting and now you're a processor. That's not the case at all. So we wanted to add in insert language that said prepare farm machinery and equipment used to prepare farm crops for storage, not just place them in storage. So that would take care of some of those on-farm minor processing pieces that are actually essential to harvest, in our opinion. And then we also were working on an implementation piece. And that has been the huge issue, because there is a complete lack of education and an understanding from everyone of what should actually be assessed, how are people supposed to report, how are people supposed to provide this information and even know effectively what they're supposed to be doing, and then how do you potentially deal with decades of revenue that hasn't been reported, when in reality it probably could have been. So that was our bill. It was HB 2264. We ran it really aggressively. I think I drafted 100 different versions of the bill trying to get us there, and we got really close, but we ran into this confusion and frustration issue, and an issue of trying to identify what is the revenue impact. Because how do you quantify a revenue impact that no one really understands? So we were unsuccessful in 2019, but we are currently in a work group, a legislative work group convened by Representative Marsh and Representative Lynn Finley, and we are feeling really positive that this session we are going to be able to get some changes. Our goal ideally would be in this short session to get something, and we are feeling positive about it, but it's going to be a really big lift, and we're going to need feedback and help from you guys. And Jonathan, I don't know if you want to add anything. Jonathan is the lead on this issue. I'm just the grunt who looked at all of this legal research. So that's why I'm up here today, but he's the real policy guy on this. So do you have anything to get feedback on?
No, I mean, other than that, Sam has done an incredible amount of work on this, so don't let her take that away from herself. I mean, just on the politics end, I mean, we had our the initial work group meeting. I think it went really well. We do feel confident that the legislators want to provide a fix, and the assessors are desperate for a clear, bright line to make their jobs easier, to make just kind of that relationship with a lot of farmers out there a bit better. So there's work to be done here. We obviously we can't give tax advice, but at least in the public policy space, it's moving forward, and we'll see what we can come up with for this short session. So.
Yeah. Questions?
If this goes through, is it retroactive, or is it from this day forward?
It will likely not be retroactive. However, something we have considered and that we would like to push forward, and I'm not saying this is going to be possible, but it's definitely on our goals, is to create sort of like a safe harbor agreement or a safe harbor program that if people come forward voluntarily, perhaps maybe they only have to pay for the last 3 or 5 years instead of potentially the last 2 decades. or try to encourage people to come forward voluntarily and report in a certain way. We don't know how the department's gonna handle it at all.
Well, yeah, and to add to that though, I think that stuff that would be deemed personal property, I mean, would continue in that fashion, right? So in fact, retroactively. But I think what Sam is touching on there is that there still might be some equipment out there that no matter what we do is real property that people have not been reporting, that as should have been real, or, you know, not reporting as real property, but should have been. That's what Sam's talking about there, is that there's some things out there that are truly real property that have not been on the tax rolls that might come, you know, might be found. And that's what she's talking about there, so, yeah.
So are you supposed to report all the things that are clearly exempt? Or just the things that are?
You're supposed, from what we have been told by assessor, you're supposed to, in your good faith belief of understanding what the law is and the guidance, report what you believe to be exempted. The problem is what do we think is supposed to be exempted?
So you need to make a list of all your hundreds and hundreds of items of farm equipment that you don't use, sitting around, it's.
Yeah, and there's also the age thing, and there's also the value piece that comes in after.
What are those? What is the age thing and the value?
I will have to get you that information after. I don't have that off the top of my head.
Well, and part of that too is, I mean, things that are clearly like tools, tractors, like those are clearly exempted and not necessarily in this gray camp that we're looking at. Like what's in this bucket is, you know, our hay presses that have come in that you're hardwiring in, or things that you're bolting down. So, you know, the question was, well, what about a welder that you have, you know, you've wired into a junction box? Does that all of a sudden become part of the building and therefore real property?
Or seed cleaners.
Or seed
The
cleaners.
big thing we got was seed cleaners, because people weren't aware of the administrative rule, and none of the guidance that they were being given was telling them that seed cleaners are just called out as an example in administrative rule. So people thought their seed cleaning equipment this whole time was exempted.
So my question was still, are you supposed to be reporting the things that are you supposed to report tractors and let them make the determination, every single thing, or only the ones that could be called real property?
It's what you think should be, don't meet within the statute.
It should be personal property,
Yeah.
considered personal property, should be listed.
Yeah. So like I said, I'm not a tax professional. This is where I need you guys to go back and work with your accountants and your attorneys on how you should be filling out this form. My goal today is to talk to you about these gray areas of the law that we are identifying and trying to change within this piece of legislation. Sorry.
Isn't it rather dangerous to be filling out these forms when the tax assessor doesn't even know what the forms mean?
Yeah, it's
how they expect us to know what they mean.
Absolutely, and that's why we are trying really hard within this short session to try to go get something, because the assessors themselves are frustrated and they don't understand what they're supposed to be doing, and they want clear guidance within the statute. They want the statute changed to tell them exactly how to go do this analysis and what they should do. And something they've considered, which we have agreed in policy we actually don't agree with, is they just want to go put a list into statute that says exactly what is exempt and what is not. But that's troubling as technology changes, as different models show up, and we would be back at the legislature every single year trying to lobby to add things to this list or pull things off. So in our opinion, we think that the two-step analysis is the right way to go, but are there ways that we can change statute to kind of get out of that gray area, or roll back how the department has very broadly interpreted things? Because in our opinion, that statute was supposed to be a broad exemption, and it has been ratcheted down so severely by interpretation of the Department of Revenue. That's our goal for this upcoming session.
So I want to go back to a few more questions when the gentleman said that his farm hadn't submitted this form in the past. So are you saying I understand the confusion, and are you saying that we should be reaching out to obtain this form, not understanding how it will affect us or what we're supposed to put on the form?
This is again a piece of tax advice that I cannot give you. I would consult with your own tax attorney or your own accountant on the best way for you and your operation to reach out with your assessor, because every county has different relationships with their assessors. Marion County, we've had a good working relationship with them. They're more willing to talk with us and give us advice that's not going to come in with a strong enforcement hammer. Your county assessor might, and you might have a closer relationship with the Department of Revenue. So I cannot advise you one way or another on that one. I would encourage you to reach out with your own tax attorney and your own accountants to talk about that. Are there other questions or concerns on things on the policy moving forward or Dave?
I was to say, the one thing we know with certainty is that this is a broken system that needs to be fixed. So
Yeah.
when you get the call next year, or if it's in the 2021 session, whenever you get the call that says, please help us get your legislator to understand this problem and understand the need for a fix, please do lend a hand and give them a call or visit them or email them, whatever you're comfortable with.
Yeah.
It's going to be really critically important, because anything that's a technical tax fix is already hard to get public policymakers to understand right. And we have, I would say, Department of Revenue that is not, I would say they're averse to our point of view.
Yes.
And they would rather keep the opportunity to get as much revenue as possible through this means. And so that's the barrier. So a lot of legislators will listen to an agency person. And so we'll need everything that we can at a constituent level to help us get this fixed when we have the opportunity.
Doesn't this fall into line with a lot of the other law stuff that the legislature is trying to do? They don't know agriculture.
No.
And it's all coming, this is just one part of it. There are so many other areas, and they have no clue what they're dealing with.
They don't. We've seen this exemption actually try to be repealed in the last 5 years. Before, we have seen it took a lot of effort on Jonathan and I's behalf just to do basic education with the Legislative Revenue Office, who is going to do the fiscal impact. It's our main goal throughout this whole process to continue to bring forward your guys' stories and your guys' real life examples to the legislatures. We have 3 tours planned for them on this exact issue to come out within our legislative work group to actually go on a farm and see these pieces of equipment and understand what's going on, because we literally had the Department of Revenue tell the legislators that these farms are huge. There's these massive businesses. They have smokestacks. I'm like, I don't know what smokestack you're seeing at a farm. And what has been portrayed by the Department of Revenue is that there is just this massive amount of unclaimed revenue out there on agriculture, which is why they're turning a new eye. And so it is Jonathan and I's job to go out there and to give these real life examples to them and keep trying to open that dialogue with them. So absolutely. Any other questions? I feel bad. I was nervous giving this presentation because I'm not a tax attorney, and this is a tax symposium, and I understand you guys are looking for answers. Unfortunately, we don't have any. And I wanted to just take this opportunity to tell you guys that this is the mess we're finding themselves in, and to encourage you guys to start thinking about this and working with your tax attorneys and your accountants. And then when we ask you to help us this session over voter voice, to come testify, to give us feedback, we need this feedback from you guys. So I wanted to really come here and tee up this issue and give you guys a little bit of background as to why Farm Bureau is working on this bill in the next session.
I just want to make a comment to all my friends here that because I sense a little bit of confusion from some of the questions, and I would like to be corrected. We do have a tax attorney here. If you run a business in Oregon, you are required to file a personal property tax return.
Yeah.
Period. So that needs to be understood. This presentation here isn't whether you should be filing or not. It's what you should be claiming or not claiming. And, all of us have computers, a desk, chairs. We've been filing one for years. It's really not that big of a deal. It is a big deal if they start assessing the items that she's talking about here. But if you live in Marion County, you just go on, type in Marion County Assessor, go to the webpage, and download the personal property tax, and it tells you what is, there are millions of things that aren't on their list, but if it's a licensed vehicle, no. If it's a fixed load trailer, yes. Talking about tools are listed on the Marion County one as maintenance tools, or an item you put a value on right on their form. Your maintenance supplies. But when you get all down to the end, you're the one that's putting your assumed value on these things. You get down to the end and it's $100,000 or whatever, and then you get, when you get your tax bill for your property and your income tax every year, you also get one for personal property tax. It really isn't that much for us, because we're a small potatoes. But I just did some of the questions there to think, well, I've never done it. Just go to your county assessor webpage and look and read the thing, and it isn't really that scary. I'm concerned about the question about, number one, if you've never done it and you get caught, do we have any war stories about that? Or two, someone like me that's been filing it for years and years and years, I'll bet you if they came out to my place, they'd find things that I should have been putting in there.
And that last piece is exactly why Farm Bureau is involved at this moment. We're trying to be proactive on this. The writing is on the wall. The Marion County Assessor, the hornet's nest has been kicked. And we were really worried in this legislative session and trying to be tactful about what information we provide and what we want to do. But in our opinion, and what the guidance we got on moving forward this is the hornet's nest has been kicked. So can we all work together with the assessors, with the table at the Department of Revenue to try to limit the impact that this can be, and can we try to roll this out in a way that is not going to be extremely harmful to people. So we are continuing these efforts. This is why we need you guys to be involved.